We have to go across to Sandeep Kumar, who's the MD of Tata Metaliks, standing by. Sandeep, it's great to have you on the show. Good morning. Let me start off by asking you about, the pig iron division. It seems to have hit some hurdles in Q3. Are the issues with respect to unscheduled shutdowns now behind you?
Yeah, so we had this unfortunate, I would say, incidents of furnace not behaving, and we had to take some shutdowns, in fact, in both our furnaces. That impacted the production and cost both. However, we were able to make up a large part of it through increased sales of the pipe business, which was healthy, and therefore, if you look at the PBT compared to Q3 of last year, we are almost at the same level, in fact, slightly higher. So all in all, I think that's all behind us, and now I think Q4 looks much more positive for us.
Right. So will pig iron volumes and margins also pick up in the fourth quarter? And if that were to be the case, what according to you would drive it?
Well, the Q4, there is only one issue, which is that the market is softening, and I think the raw material prices, the steel market and the liquidity, that's what traditionally the Q4 is the best quarter, but that's what is dragging it a bit. So those are the headwinds that we are facing currently. But generally Q4 is superior than other quarters. So we will have to wait and watch. But that's more for the pig iron business. As far as the pipe business is concerned, we have a robust order pipeline, and therefore we don't see a problem. In fact, Q3 has been extremely good. In fact, has been the highest ever, both in terms of production and sales. And Q4, if we can do similar or better, I think we would be more or less on track with our annual plans.
Right. And to what extent did iron ore, coal and coke prices increase, and how much has been the impact on your costs and margins?
So if you look at the prices of coke, which is the key raw material, compared to, say, year-on-year Q3, it moved up by about 17%. And we were able to pass this on to our customers, both in pig iron and the pipe business. So the pig iron, moved up, the realizations moved up by almost 23%. And if you look at the pipe sales, the pipe NRs moved up by 8%. But that's because the pipe sales are more stable. So the raw material push was also another major factor for us, though we were able to pass on the prices. And going into Q4, as the prices come down, they would also impact the finished goods, but more on the pig iron side than on the ductile iron pipe, where the business is conducted over a longer period, 3 to 6 months' time.
Right. The worry factor has been, for the results that is, that the margins have been a bit of a drag on the bottom line. How is it that you would manage the same in the fourth quarter and for the entire financial year as well?
The margins have been slightly compressed, mainly because of the cost push, on two reasons. One is the raw material increases, and the other is the fact that the furnaces were down, so the fixed cost and I would say the coke rates went up significantly. So I think those are behind us, so I don't see that as a problem at all. In fact, going forward, we should improve significantly, especially with our PCI, which is the coal injection plant, coming up. So that's come up as per our plans, and I think we should start seeing some early results in Q4, although the full results of it would only start coming in from next quarter.
Okay. What is it that you would want to look out for as you close out? I mean, there's one more quarter to go. We are underway Q3 earnings. What is it that one needs to look out for in FY20 from an investment standpoint, from a growth standpoint in Tata Metaliks?
I think we are dependent to a large extent on two factors. The pipe business is dependent on government spend on water infrastructure, which has been pretty robust over the last 2-3 years, and the projections for the next 5 years are also very, very good, in fact, in double digits. So that's more than the GDP projection for the country. If these projections turn out to be true, and these projections have been our basis or projects that have been kind of allocated and which get panned out over the next few years, things should not be a problem. However, with the change in government, if there are any further changes, that is something which will remain a bit uncertain. But water is a very basic need of the community, of the country, and therefore I don't see that as a big problem. And I think things should look up from here rather than looking down. Whichever government comes into power, or if the same government comes in, I think the investment in water infrastructure has to continue. As far as the pig iron business is concerned, that is more dependent upon steel and steel raw materials, and that's subject to fluctuations, and I would not hazard a guess on how it would go.
Okay, so if you had to really, outline as to what the vision for the next quarter is going to be, can you briefly tell us a little bit about how exactly the quarter is going to move from here, just looking at the kind of demand-supply dynamics and, the landscape that you're operating the business in?
I think this Q4 should be good for the industry in general and for Tata Metaliks specifically. But if you look at next year, I think with elections coming in, there will be some uncertainty. Also, typically for the pipe business, the water business, the funds start getting released. So Q1 is normally a weak quarter. So Q1 and Q2 both are weak quarters. So that's the traditional way. So there would be some hiccups as we go forward into Q1 because of these two factors. But generally, if you look at slightly longer term perspective, the water investments have to increase. The country will go through a crisis if water investments do not take place. I mean, the world is, many parts of the world are facing that crisis. So it's a good area to be in, and therefore we are positioned quite well. We are very competitive, and I think we are one of the most competitive in the pipe business. So for us, I think it's quite a bit of optimism going forward. We have been cutting costs and focusing a lot on structural cost reductions. And as we step into the next year and the next quarter, I think those efforts are going to be redoubled. And I think I can only see optimism as we go forward. The only headwinds that could come up is more from the steel sector and from the steel raw materials, where there would be some uncertainty, and how things would pan out is a little difficult to say at this point in time.
Okay. Thanks very much for taking out the time and speaking with us on this issue, Sandeep. Wish you a very good day.